Hello and welcome to this video tutorial on using the DTSW document wizard. But before we begin, it's maybe best to go back and review the types of documents that we need to gather up to produce our financial statements. Let's go there now. So it could be a number of documents. We've reviewed those with you already. But, for instance, like a comparative market analysis on the real estate property, your T1 general forms, tax forms, notices of assessment. Here's an example of a notice of assessment. If there's a business involved, there could be a business evaluation. Pay stubs, account statements for your bank accounts, T4s possibly we will be asking you for, insurance policies, your credit card statements. Just as just an example, it's not an exhaustive example. Here's another example of a comparative market analysis, establishing the value for real estate if you're retaining the real estate. And here is a RSP, example of an RSP statement. And you would have seen this document. It was attached on the email that we sent to you, and it basically outlines the various documents and the parts on which they fit on to the financial statements. You have a part 1, which is all your income documents. That's your tax returns, your notices of assessment, your pay stub, your extended health benefits booklet. And then you have the part 4A, which is land. It's basically all the documents supporting the value of the land, but not the mortgages. So this would be the comparative market analysis, maybe an impact statement from your assessed value. It could also be an appraisal report. Then there is the part 4B, which is all the household items like your household goods, furniture, boats, jewelry, electronics items, and such. We'll actually send you a separate spreadsheet for that. We do that a little differently. Then there is part 4C, which is everything about your banking. This will be your checking account, your savings, maybe defined benefit pensions or defined contribution pensions, your tax-free savings accounts, savings bonds, GICs, RSPs, RESPs, LIRAs. LIRA is a pension that you may have held when you worked at a previous employer. Part 4D is life insurance. This is all your life insurance policies, both life and disability. Part 4E is those business assets, like a business. So to do businesses, we need 5 years of financial statements, 5 years of corporate taxes, a shareholder or partnership agreement, percentage interest in the business, and likely a business evaluation. And part 4F is money owed to you. This could be from personal loans, loans to family, businesses, court judgments, estates, and Canada Revenue Agency tax refunds. Other property would be intellectual property, could be restricted share units, could be stock options. Then the other part of your banking life here is the part 5, debts. This is debts and liabilities. So here we want to know everything about your debt, mortgages, rental property, could be cottage, mortgage on a property, mortgage on a second mortgage, student loans, credit cards, line of credit, any liens, accounts payable, monies owed to Revenue Canada, unpaid legal bills, mortgage statements for all the properties. And then part 6 is the date of marriage. This is an important piece because it often gets overlooked because it's been so long ago and it's so hard to find documents for things that happened quite some time ago. But any of the assets that you brought into this relationship are what we call the date of marriage exemption, and you can hold that out and separate from the equalization. And then we need to document anything that's excluded. This could be an inheritance or a gift, could be life insurance proceeds, could be sometimes with families with the RESP, we hold that separate and exclude that out because really that's for the children. So then there's, of course, disposed of property. And this is basically a disclosure of any property or any asset that you may have disposed of in the last couple of years. So that's that. Now, how does that all relate to the financial statement? Well, let's look at a financial statement and we'll see. So here's a typical Form 13.1, and it's broken down into its parts. The income part is not shown here, but we're going to go right to the Part 4A, which is the land. And so we will then list all the real estate assets here, and this is where we back it up with the notice of assessment from NPAC, or the which isn't completely definitive, but it's a good way to start the documentation, or a comparative market analysis or an appraisal. This is only important if you're one of you are keeping the property. But if you're selling the property, it's not overly important to get a valuation because ultimately the government or the buyers are going to determine its value. Here is where we lay out the personal property effects or the household goods, wares, and effects. Cars, we typically use Black Book value for cars. And as I said, we'll send you a separate document for doing this personal property as a way of tabulating its value. Part 4C is the bank accounts, savings, securities, and pension. So this is all the financial assets go in here. And then the life insurance pieces all go in here. Now, we won't be having you do developing the financial statements. That's our job, but the wizard really helps gather and organize the documents so that we can do our analytical work and come up with your neutral financial statements. Here are where the business interests go. Here is where the money owed to you goes, and this is where some of the other property is recorded. And down here is where the debts get recorded. So debts and other liabilities. So this can be your car loan, the mortgage, Visa statements, lines of credit. And here is what we call the date of marriage piece, where we document assets that were brought into the family on the date of marriage. And here is where we document the excluded. So if there's, for instance, the RESP, it would go here. And what it'll do is produce a net family property value, and this is the numbers in which the spouses equalize. So if one comes in at $20,000 and the other one comes in at $10,000, then spouse with the 20,000 equalizes with the spouse with 10 by half the difference. So in this case, it would be $5,000. So that is the financial statement quick review. So that maybe give you some context of how it all comes together. So now let's go to the document wizard and start documenting